Hello penny pickers, my name is Dehan and welcome back to your number one place for all your investing needs. So in today's video, we're going to be going over 4 of the best penny stocks right now in January, and one of the analysts is seeing a 137% upside potential on one of these penny stocks. Now let's dive on into them. So the number one penny stock on the list is going to be by analyst Landberg Thalmann. It's going to be BioNano Genomics. So you guys know this one, BNGO. We called this stock when it was trading at about $1 per share. The stock went to highs of about $7 per share. So it was over a 700% gain for some of us. So congratulations on anybody that invested into that one. We did very well to call that one. We were one of the first channels to discuss the stock and cover it. A lot of people followed us after that. So on Friday, the company announced the pricing of its new public stock offering. The company stated that it will be selling around 29 million shares of the common stock for a price of $3.05 per share. While raises aren't usually the high point with penny stocks, after the announcement, shares of BNGO stock ended up putting in a 14% gain by the end of the day on Friday. Of course, the idea of the share dilution is on the table, but this deal should add roughly 88 million on its balance sheet. There's definitely a trade-off here, but it seems as BioNano is working to show strength in its financials. The company is currently utilizing genetic testing to help patients suffering from a wide variety of ailments. This is based off of its safer system, scientists and clinicians conducting genetic research and patient testing. So a lot of you recently have been commenting, wanting me to show the ticker symbol. So the ticker symbol is going to be right there, BNGO. A lot of you guys wanted that, so I'm showing that right there. BNGO is the ticker symbol. It's on the screen for you guys. Hopefully that's good enough. If it's not, let me know. I'll do something better. But anyways, this stock right here, we called this stock when it was trading around, let's see here. It was probably trading around right here about $1 per share. It was right before this pop on 12/29. So right before the new year, we called this stock, and look at the volume, 287 million shares. Then we had 800 million shares, 400 million shares, 500 million shares, and now volume has tapered off a little bit where we're trading around 100 million shares per day. But this stock went from about $1, like we said, all the way to a high of $7.42. So the stock continued to boom. Then we made a little bit of a pullback. Now we're consolidating, hoping for volume to pick up eventually and to continue on that trend up. If we can break through that $7 area once again, we can continue to make new highs, and that's what we're going to be looking forward to throughout 2021. Now, what everybody is hoping for is for Cathie Wood. Obviously, everybody knows ARK Invest. They're hoping that one of those companies is going to dive into this because of the whole genomics. So basically, Cathie Wood, if you don't know, she's really into these genomics, and she thinks that is going to be the future of the next big boom, I guess you could say. A lot of people follow tech stocks, a lot of people follow the EV market, the renewable energy. Well, she's saying that genomics is going to be the next big thing, and everybody is hoping that BNGO is going to be that one on that list. So that's what we're going to be looking out for, guys. As always, guys, you guys do an amazing job on my videos. I want to just say I appreciate every single one of you. Go ahead and smash that like button. Let's get over 150 likes on this video. Also, go ahead and subscribe to the channel and turn on that bell notifications for more videos like this. Leave a comment below. What penny stocks are you buying right now, or what stocks in general are you buying? Did you invest in BNGO, and did you make any gains? I know a lot of you guys did. And also, we're almost at 12,000 subscribers. Let's try to get that by the end of January. The second penny stock is going to be by Citigroup Analyst, and it's going to be Lexicon Pharmaceuticals. So this company is in a phase 3 trial for its drug LX9211, which is utilized in the treatment of type 2 diabetes. Lexicon has several licensing agreements that are currently underway. This includes agreements with Genentech, Ipsen Pharma SAS, and others. On January 4th, the company announced that it had dosed its first patients in a study of LX9211. The goal of this study is to see if its efficacy is in treating post-herpetic neuralgia. Now, we have talked about this stock as well in the last couple of weeks. Now, over the course of 6 weeks, patients at 30 clinical sites will receive either LX9211 or a placebo. Additionally, this drug has received a fast track designation from the FDA, which is a major hurdle that the company has overcome. Investors should consider that it will still take some time before the different trials are completed, but in the meantime, the company is still developing other drugs. Lexicon has illustrated its focus on treating diabetes and diabetic-related conditions. Approximately 34 million people are currently living with diabetes in the United States. This provides a large base for Lexicon to work off of. As we all know, we love our McDonald's and our fast food. So what to watch with LXRX? So what's more is that the company presents next Thursday at the JP Morgan Healthcare Conference. While the bank doesn't currently cover Lexicon, Citigroup has recently weighed in. The firm has a buy rating on the penny stock along with the LXRX stock forecast price 56% higher than Friday's close at the $6. So once again, here's the ticker symbol for you guys, LXRX. That is the ticker symbol, Lexicon Pharmaceutical. So if we take a look at this one and dive into it, the stock was up about 4% on Friday at the close. This stock is trading at $3.84. We're very bullish on it, short-term, mid-term, and long-term by analysts. This stock here was trading at around $1.70, $1.80, pretty much for the whole, half of the year. Then we broke through that support area and continued to go down. We bounced off of this new support area that it created around the $1 area, and we bounced off of it with some huge volume here. 100 million shares traded. Stock went from about $1 all the way to highest here about $2.38. Then we consolidated, and then more volume, 200 million shares right there from $1.58 all the way to highs of about $3.34, almost $4 at one point. And the stock is just continuing to go on up. So we have this little wedge that we see right here. Even though volume is very low, only a few million shares traded, we see this wedge and we see this pattern as the stock is continuing to make, higher highs and continue to build up. If it breaks through that $4 resistance, we can, hit highs at around $4.50 as the next resistance that we see in the previous time right here. So if we can break through that $4.50 range, we can definitely hit $5 per share and continue that run up. So we're going to be looking out for that in 2021. The third penny stock on our list is going to be by Cantor Fitzgerald. It's going to be Verastem Inc. So this one right here, the company is developing and commercializing various treatments for cancer. Verastem has several unique drugs that are currently in its pipeline. This includes Devaslisp, which is used rare types of leukemia. Last month, the company announced that it has begun a phase 2 study for its drug known as VS6766. The goal of this study is to see if its efficacy in treating chemotherapy-resistant cancers. One thing to keep in mind is that trials like these take a significant amount of time, and in the meantime, biotech companies will usually spend quite a lot of money on developing and commercialization. Verastem still boasts a broad portfolio of pharmaceuticals that are in the late trial phases. In its latest financial report, the company posted a very healthy balance sheet for the Q3 2020. Brian Stuglick, CEO of Verastem, stated that the third quarter of 2020 was marked by most notable by the sales of the Coprica franchise to Secure Bio in a deal valued at around $311 million plus royalties. This strategic transaction allows us to focus on our resources and efforts on advancing the VS6766 and defectinib combination program. What to watch with VSTM? Looking ahead to next week, the company presents at the HC Wainwright Bio Connection beginning on Monday. So, I'm going to be posting this video on Monday. While HC currently has a buy rating on the stock, it isn't the only one. Cantor Fitzgerald not only agreed with this rating, it also has placed a $6 price target on this stock. This places Cantor's VSTM stock forecast price 137% higher than the Friday's closing levels. Once again, guys, the ticker symbol for this third penny stock is going to be VSTM. Verastem. So right there, if we take a look at this one, it's went up about 8%. If you take a look right there on Friday, the stock is trading at $2.53. On the short term, mid-term, long-term, analysts are saying they're very bullish on this stock. What we can see here, the stock traded around $1.80, $1.90. Then we fell down, built up a new support around this $1, $1.20 area, and then we bounced, off of it with volume. We had 6 million shares, 14 million shares. The stock went from about $1.48 all the way to highs about $2.40, and we're consolidating right here and continuing, to trade in this, little pattern of $2 to $2.20. Now, what we're going to be looking for is volume to continue to pick up, some positive news, obviously, with it, and then break through. Our next resistance is going to be here around this $3 area. After we pass that $3 area, we have all the way up to about $4 until we reach our next resistance, and then we hope for a continuation onto the trend up and, past the $4.50 and then potentially $5 per share with more positive news and some data coming out in 2021. Last but not least, the number 4 penny stock is going to be by Raymond James, which is another analyst, and they're putting this one on a hold rating. So this is going to be Transenterix, that is going to be the company. While it isn't officially buy rated, Transenterix was one of the biggest gainers of the day on January 8th. It also saw a nice continuation into post-market trading. The majority of this positive sentiment comes from an announcement regarding its business that was released on Wednesday. The announcement stated that the company ended the year with around $17.5 million in cash on hand and a full year revenue of about $3 million. Anthony Fernando, CEO of Transenterix, stated that looking at 2020 as a whole, we are pleased with the momentum generated across our organization during these challenging times. We continue to expand our global footprint with the new installations and procedure volumes rebounded in the back half of the year across each of our geographies. Now, for some context, Transenterix is a biotech product manufacturer producing tools needed in the digital laparoscopy. In addition, the company offers robotic tools that can be used in the wide range of surgical applications. These products have seen increased popularity in the past few years as surgical technology has continued to develop. As a cutting-edge company, Transenterix needs to make sure that it's ahead of the curve for its foreseeable future. Now, what to watch with TRXC is going to be, keep in mind that the company has several milestones in 2021 that the market should keep in mind during the first half of the year, especially. Transenterix expects to achieve regulatory milestones, including receive of its CE mark approval for its ISU in Europe and FDA 510K clearance for general surgery indication expansion, file for FDA 510K clearance for its articulating instruments, and file for FDA 510K clearance for the next generation ISU features. Now, this one, ticker symbol TRXC right there, the stock was up about 28, almost 29% on Friday. Closed at about $1.16. So this stock was trading around 30 cents here pretty much the whole year. We had a bounce here all the way to about $1, and then we pulled back down to the previous support level at around 35 cents per share. And then volume picked up here towards the end of the year. We started to trade 5 million, 6 million, 24 million shares. As volume picked up, the price continued to trend on up, and now we had even more volume towards the beginning of January, and the stock went from about 63 cents all the way to highs about $1.25. So that's pretty much a 100% gain right there. Now we pulled back a little bit, closed at $1.16. What we're going to be looking forward to in the next half of January is going to be for volume to continue to pick up and this stock to continue to break through that. If we can break through that resistance at about $1.25, it can definitely continue to trend on up and make new highs, and that's what we're going to be looking forward to, especially with all these new, things that they're trying to get approved with the FDA, which is going to be very, very positive for us. Now, as always, guys, I hope you guys enjoyed this video. If you did, go ahead and smash that like button for me. Subscribe to the channel for more content like this. And also, I'm not a financial advisor, like I always say, so these are just, analysts that are covering these stocks and saying that they're potentially having some upside. So this is just for educational purposes. Before investing into any type of stocks, especially penny stocks, you should talk to your financial advisor. Also, if you guys want to trade penny stocks, there's going to be 3 links in the description for Robinhood, M1 Finance, and Webull. Get your 2 free stocks from Webull when you sign up today and add money onto your account. So I really hope you guys enjoyed this video. If you did, I hope to see you guys next time. Goodbye.